MoffettNathanson out with a note on payment stocks saying there are two names that offer an unusually attractive entry point for investors. Let's bring in the author of that note, MoffettNathanson Senior Managing Director Lisa Ellis. Lisa, MasterCard and Visa, valuations are compelling here. Why?
Yes, look, it's a technical dynamic. Both Visa and MasterCard have derated about 10% year to date. They performed kind of roughly in line with the market, but these are companies that compound earnings in the high teens, so they really should be outperforming. But the stocks have derated. It looks like it's very technical in nature, driven a lot by the sort of AI mania that's been going on, with a lot of rotation hard into these AI-driven stocks. Visa and MasterCard's performance has been fantastic. Both companies have beat both on revenue and EPS for 11 straight quarters. And so the dynamic we're calling out here is that when we've seen this happen before, where they've derated like this, it takes, 6 months or so, or at least for it to correct. But then they tend to meaningfully outperform. Like, you can look back at 2017, both stocks were up over 40% that year when we had a similar dynamic going on.
Yeah, and certainly I spoke to MasterCard CEO Michael Miebach just recently on the show, and he talked about the fact that the consumers continue to be resilient, perhaps even more so than he's expected. And he talked about the strength of travel and how that has helped to propel those strong results. Take a listen.
Probably on the outbound side at 65% of pre-crisis, pre-COVID levels of outbound travel. So that's happening. The summers, right now, I just came back from a trip. Very anecdotally, you can't get a seat, and people do want to travel.
Now, keep in mind when we spoke, the company was already, in this quiet period ahead of upcoming earnings. But he sounds like a person who thinks that this travel strength is going to continue. You see it the same way?
Absolutely. Absolutely. You can look back, and we've kind of lost sight of it because we're 3 years into the pandemic, but we're still several points below where we were in terms of mix of travel. And you have to keep in mind, pre-pandemic, international travel was almost 25% of the revenue of Visa and MasterCard. It dropped all the way down to about 16%, and it still hasn't climbed all the way back up. And that's been a big factor driving these continued beats on revenue and EPS. And as Michael highlighted, and as anyone knows that's out there trying to travel, it's absolutely continuing. I think maybe American Express gave the most recent number on it. Their travel numbers are still up almost 30% year on year this year. So that travel strength keeps powering through and keeps powering these payments companies.
But Lisa, how at risk are Visa and MasterCard to potential headlines as the year goes on about a slowdown in consumer activity or overall economic activity?
Yeah, look, of course, their businesses are, driven by consumer spending. And so, it tends to cause a little bit of a rotation out of the stocks, right? There's kind of an area that people trim when consumer spending gets a little bit soft. But you keep in mind, these companies grow revenues usually in the low teens, and only about 5 or 6 points of that is actually driven by consumer spending. The rest of it is driven by cash to card conversion, the secular side of it, the people still using more debit, more credit cards and less cash, not only in the US, but all over the world where there's still tons of cash being used. And so even in a severe recession, they still grow revenues because of that kind of continued cash to card conversion. Back in 2009, when PCE dropped, consumer spending dropped to -5, Visa and MasterCard actually still grew revenues a couple of points. So they're not immune to it, of course, but there's a huge secular, underpinning to their businesses that powers through any sort of overall macro slowdown.